Hey, I hope everyone's doing well. I wanted to talk about today's trading range and how someone can make money from trading a trading range. So, the first thing is that when you're in a trading range, you want to look for weak signals, bad signals, and then try to take the opposite trade. And it's also better to scalp. So, let me just look at an example. Here, let's say looking at this rally we had up from the low to the high up here. And then you get this bear bar, and it's a bear doji with a tail on the bottom. All right, so looking at this is the first bar in 8 or 9 bars where the market goes below it. So all these other bars, the low of that bar stayed above the high of the prior bar. So after this strong of a rally up, there's probably going to be a second leg. So pull back, second leg. And also there's this weak buy signal. There's this weak sell signal here on this bear bar. So think about how many people want to be selling below this bear bar. Probably not too many. In fact, there's probably more buyers below that. So that's the idea of trying to scalp during a trading range today. All right, so we have 8 or 9 bars up without a pullback. Now we get this, and it's a bad sell signal. So the idea here would be to place a limit order to buy below that bar there. And then that's your order. So then you would try to go for a minimum scalp size. And with, I would say the minimum scalp size is about 5 points in the E-mini currently. Sometimes that goes up, especially when we have larger days. But right now, the days aren't too big. The ranges aren't, like today's range was maybe about 40 points. So that's actually pretty small relative to what we had. So I would call the minimum scalp size about 5 points. So the idea would be we're in a trading range today. We've had a decent rally up. This first pullback is probably going to be bots. People will buy here and try to get 5 points out of it. All right, so they buy here, and then 5 points is right here. So strong move up, pullback, probably will have a second leg up, and you get that second leg there. Then that would be a 5-point scalp. And so if you look at this chart, if you follow this idea where you look for a bad signal and then do the opposite, there's actually quite a few trades on this chart, and we'll definitely look at some. I wanted to show you another thing that's important is not just trying to find bad signals, but also trying to buy low in the range and trying to sell high in the range. So this is what I would call high in the range and low in the range. So this is the top third of the range, and then this is the bottom third of the range. I had the colors switched around there for a second, but the bottom third, that's where you want to look to buy, and in the top third, that's where you want to look to sell. And the reason that we do this is because there is a bias. If you're low in the range, there's a bias for that market to head back into the middle or to the top of the range. And if you're in the top of the range and you're in a trading range, then there's a bias for that to head back to the middle of the range. And some people are so loose with this idea that they really don't even look for a setup. They're just waiting for the market to get back into a certain level in the range. So for example, when this is pulling back here, they're not so concerned about trying to find like the exact right setup. They're more concerned with the idea that where are we in the range? And if we're low in the range, then they want to be buying. And that's what they do now. I still think someone should, especially starting out, they should be looking for setups and try to follow setups. So if we were looking to buy low in the range, what would I think over here? 2 ideas. One is another limit order buy would be below this bear bar like this. Okay, so we have a bear bar, and we've had a series of these attempts down. So first attempt, second attempt, a third attempt, and you can see our bear bars have these big tails in the bottoms of them. So this pulled back all the way to the midpoint here, and once again, it was down here, but it pulled back into the middle of the bar here. So the bears are not selling into the close of these bars. In fact, they're actually taking profits near the end of the bars. They're not holding for swing trades. They're selling, but they're scalping out. So they're not holding their shorts. So especially would you want to sell here, selling into this bottom that we have over here? You'd be selling right into that, and you're selling far down below this tail. So probably not a great sell. So some people will be buying below here instead of selling. They're buying. We're low in the range, and so that would be a limit order buy. And another way to buy down here low in the range would be above a bar like this. Okay, so once again, we've had these series of these pushes down that are failing to really break out of the range. We have the low over here, and we're failing to break below that here. And now a bull bar that's pulling back into that range. I'd rather not be buying after these moves down, but something I have to remember, trading range day is like opposite day. All right, normally it would be somewhat problematic to try to be buying after a bearish move down like this. But in fact, we're actually near the low of the range, and this is the buy zone. So we want to be trying to buy above bull bars low in the range. And one way to manage the trade like this, if you're buying here, it would be to put it somewhere far outside of the trading range. Put your stop far outside of the trading range. So you buy here, and maybe you put it 20 points below. So you put it down here, kind of near the 200 moving average. And you say, well, yes, my win rate will probably be high, but what happens when in the time that I lose and it comes down here? Well, one thing, you need to be trading small so that a loss like that would not impact you. You should risk no more on one trade than you would on any other trade. So if you're buying here using a wide stop, you need to trade small. A second thing, whenever you use a wide stop, your odds of that stop getting hit are actually not that high, because a trader does not intend for that stop to get hit. They're looking to manage their way out of the trade. So if they start seeing the market break down below here, let's say we get it breaks down and then we get a double top here, where instead of this acting as support, now it's below here and it's acting as resistance. In that example, that'd be a reason for them to get out of the trade. So then maybe they would only take a 10-point loss, for example, instead of the 20-point. So them taking that max risk loss is not going to happen all that often. Instead, they're going to manage their way out of it, and they'll take a lot more like small losses or small wins, and they should not be taking too many of those large losses. And an example of that is, well, this is something that I wanted to talk about as well over here. So this is a previous day. And let's say the traders come in with the idea of looking for a bad signal, and they're going to do the opposite. So let's say they see this bear bar, and they say, oh, well, there's probably not many buyers above there, so they would sell above that. So let's just say someone sold there. Well, the market probably should be turning down somewhat soon. They should not end up with this bull bar closing near its high, closing above this prior high and above the last many bars, right? So if they're selling here and then they immediately get this bull bar that's closing on its high or closing near its high, then there's probably something wrong with the trade, and they, especially considering the bullish trend this has been in, you can see the market's been up strongly. So now if we're closing above this prior high, there might be something wrong with this short. So then they should probably go ahead and just exit above the bull bar here. Okay, so initially maybe they sold here and they had their stop 20, 30 points above up here, but they're not going to actually take that full loss. They're going to allow the market to give them more information, and they see this and they'll probably just exit above, and instead they would take like a 4-point loss here instead of a much larger loss. Another reason, probably one a reason why you shouldn't take this trade, but also why you should manage it above this, is look at this gap that we have over here. So we have this gap from this high and this low. So market moved up, pulled back, market moved up again, pulled back, then it broke through, and that breakout, the pullback of that breakout did not come back and actually touch these highs. So we have a gap right there. So after we get a gap, and then we see the market trying to come back lower here and trying to go back lower here, there's a chance that that is going to break out above. If these bears are trapped, I do not want to be selling here, where the bulls are breaking the market out. I don't want to be selling when the bears are trapped. I'd rather be buying. So for this reason, I would not be taking this short above here. And also for that reason, if I was short, I'd be quick to manage it and get out above this bar here. So I just wanted to make that point on the management there, because what traders will do is they'll look at of what I'm showing, and they'll say, oh, I can, there's lots of little limit order trades I can take, and they start taking them and they'll make some money. But then what they do is they end up taking a huge loss like this, when one, they shouldn't have been in the trade in the first place, and then two, they didn't manage it correctly. So that's what the difference is. But if you're taking the right trades and you're managing them correctly, then on a day like this, there could be dozens of trades. There are actually dozens of 5-point scalps on this chart. So continuing to look at examples like this one here. On the open, we had these 3 strong bear bars down. The third one had a bit of a tail on the bottom, but we would still expect some sort of second leg after this. So pull back, and then we get the bull doji coming into the moving average, right? How many bulls want to buy above that, above this bull doji, big tail on top, right into the moving average? Not too many, right? In fact, this would be the sell zone of this move. It's a good rule of me that I have to not buy into the moving average, so I'd rather do the opposite. I'd rather be selling above this bar. So you sell here, maybe 2 different options for stops. One, you put it, like I said, far away, like 30 points away, and put it way up here. Or I found 10 points to be a reasonable stop. So you go for a reward of 5 points, and you put your stop 10 points away. You need a 66% chance of winning to make that work. And if you're selective, you can get a better than 66% chance on these scalps. So sell here, put your stop 10 points above up here, and then you collect your 5 points when it pulls back lower. And there are many opportunities like this. Okay, there are a few through here. What I wanted to point out, another one that I really liked was selling here above this bear bar. So by this point in the day, it's better to find that we're in a trading range, right? We've had this sideways movement here. We failed to break out here, failed to break out on the upside here. So by now, the odds are much higher that we're in a trading range compared to at this point. At this point, we really still didn't know, but by this point now we can tell. Yeah, we're in a trading range. Breakouts are failing. They're probably going to continue to fail. So 2 bear bars down, you get a pullback to the moving average, and once again, this is a bad buy signal. How many people want to buy above a bear bar going into the moving average when you're also expecting a second leg down, first leg, and then pull back, second leg? So when you're trading here, this is the sell zone, right? You don't want to be buying into this area. It's better to sell. So pull back, then you get your second leg. So once again, you can sell there, put your stop 10 points above, and collect your 5 points. And I'll say it once more. If you get a trading range like this, a nice trading range day, which once again we've clearly identified by this point. It's clear that we're in a range at this point, and then you can really make a lot of winning trades on a day like this. Another example, buying below this bar. Right, we're really in the middle of the day, but at least we're kind of at least we're not too high up in the range. So we've had a bull leg up. Now, is this a good sell signal? No, it's a bull body. It's going into the moving average. All right, so there's going to be buyers below there. And you get your 5 points on this bull bar here. So you wouldn't be stopped out, and the market would come back and it would get you with a profit of 5 points here. And you also have traders selling above this minor high. So that's another important part. You see all these little tails that happen in the middle of the range, like this tail and this tail, here, this tail, this, and this. What happens to those tails all day long on trading range day? The market goes past them. So anyone, let's say anyone that sold somewhere down here and they put their stop above this, well, they got stopped out. Or if they bought anywhere in here and they put their stop here, and the market went through that and they got stopped out. So that's what a trading range does. It looks at these minor lows and minor highs, and it just goes to them all day long. So if you see these tails in the middle of a trading range day, you should not be putting your stop there. In fact, it's better to put your profit targets there, right? If it's a bad place to put your stop, it's better to try to take profits at that level. So that's another important point. And so speaking of that, here's a minor high. What's the market probably going to do? It's probably going to go beyond it, stop people out, and it's going to reverse back into the middle of the range. So here's another point. You can limit order sell above that, put your stop 10 points away up here, and then you collect your 5 points when it pulls back here. So I could keep marking these trades probably for an hour, and talking about all the individual little limit order scalp ideas on this chart. I think I pointed out the better ones. I pointed out the ones that are occurring after it's been identified that we're in a trading range. I mean, by 12:30 or so, it's pretty clear we're having a trading range day. And I think the signs really became pretty clear really by 11:15. And so what are the two signs that I'm looking for of it being a trading range? Well, one, we have reversals on the open. So the market moves up here, then it pulls back. It gets bad follow through. So instead of us having a good follow through from these three bear bars, we go sideways for the next 15 bars or so, right? Doji bars, tails on the top of bars, tails below bars. Overlap, 2 bars up here, then 3 bars down, and then 2 bars up. Right now, their side's winning. Traders are not holding into the close of the bars. Instead, they are taking profits at the end of bars. Also, breakout attempt here that fails. Another breakout attempt that fails. So when you're seeing breakouts attempts that are failing, that's a sign of a trading range. And when you see breakouts failing, what tends to continue happening is that breakouts fail. So a couple failed breakouts here, then that increases the chances that we're going to continue to do that. So on the way up, breakout fails here, and then fails here, fails again. Now the market's going down, and it fails to go lower here. And then, oh, we got this huge bear bar, biggest bear bar of the day. And what does it do? It gets bad follow through and reverses down, and actually goes right down to where people would be stopped out at. So if they bought during this bar, the market trickles down and it would stop them out below a bar or at this minor low down here. So that's what trading ranges do, and you can identify them pretty early. Like I said, by 11 or so, I mean, it's the odds of the trading range of it being a trading range are pretty high. So you want to be looking to buy low and sell high and look for bad signals and do the opposite. So the first trade we mentioned was buying here, and this is going a little bit against what I'm saying, because I'm saying you should be selling in this top zone, and that's true. So what about buying here? Well, I still like the idea of the scalp. However, it can get, so the higher you buy in a range, the more difficult that trade's going to be, and generally the weaker the trade is going to be. So if we're buying here, we're probably a bit high in the range, but I think in this context, we'll probably get a second leg up after these 4 bull bars. So pull back, then here's your second leg, and then that's where you scalp out. I'm not trying to get more. I'm not betting on a breakout up here. I'm just trying to get those 5 points. So for me, I still think this is a reasonable scalp to take. But when you're looking at these trades, and you're still kind of developing your eye for it. Try to identify where the high of the range is and the low of the range, and then probably starting out, I would avoid taking this. So just have a hard rule. This is going to be the buying in the top of the range is going to be the exception. So just have a hard rule that I'm not going to buy in the top third. I'm not going to sell in the bottom third. I'm going to do the opposite. So yes, I think this is okay for someone with more experience because they'll be able to manage it better. And I don't want traders getting mixed up when they're starting. I don't want them getting frustrated and confused and mixed up. And it's better to just avoid buying in the top third. It's better to avoid selling in the bottom third. There was one stop order trade apart from this that I wanted to point out, was the short here. So on a trading range day, it's going to be mostly limit order scalps, mostly scalps and scaling in. That's what's going to be the bulk of the best trades on a trading range day. But there's also a good or a reasonable stop order short here. Right, we're in the top half of the range. So if we go from the high of the range to the low of the range, at this point we're still in the top half. So that's good. Remember what I was saying about minor lows getting hit? We have a minor low here, and we're in the trading range, so that minor low is probably going to get hit. Market's probably going to go below that level there. And also, after this bear leg, we're expecting a second leg, and look at these two bull bars. Market tried to go higher here, pulled back, tried to go higher a second time, and now we're stuck below the moving average, and now we're getting this good looking bear bar. So probably going to be seller's blow here, at least enough to be able to get down below this this low here. So because of this double top, because we're expecting a second leg down, because we're somewhat high in the trading range and below the moving average, probably good to try to be going short here. I think this is okay to try to go for a scalp as well. So go for 5 points, and you'd be getting out on this bar here. So after the double top, below the moving average, that should be reasonable to take a short below that bar. So that's all I'm going to be talking about on this. Like I said, I mean, there's just trades all day long if it's a good trading range day, and if you can identify that early, then just the more trades that you'll be able to take. So before I go, I wanted to talk about the daily chart, where we're at with that. Well, I've had this measured move drawn on here for a week or two now. So it's from the bottom of this big bull bar to the top. So this was a Trump tariff news day. That's what created this big bull bar. And I've had this measured move on for a couple weeks maybe, and we're getting pretty close to that measured move up here. So I expect us to get there, so I imagine we have a little bit more buying. And I've been saying we're probably in a larger trading range. So once again, right, we just looked at how to trade a trading range, and we're getting higher up in the range. So I imagine we'll probably start to see a little bit more profit taking, a little bit more selling occurring, especially once we get up to this measured move target, and especially once we get up to these previous all-time highs up here. So yeah, I mean, I think we have a little bit more up, and we'll probably start to see more trading range price action somewhat soon. So what might that mean? It would be hard to see the market reversing back down and testing the bottom of the range down here at this point. When we were back here, I thought the market still would make a second attempt lower. Now that we've had this much strength, I don't think we would quickly come back and test here. We might not come back here and test this for a while. So even though I think we're going to be in a trading range, I don't foresee us, over like 2 months from now coming back down here and testing this. I think we're going to be in a more bullish type of trading range. In fact, you can look at this as a head and shoulders bottom. So left shoulder, the head, and then right shoulder somewhere over here. And what that would be implying is that we're at least going to come up and test these highs and would probably push up beyond that as well. So I do think we're probably going to run into a little bit more selling as we get near the highs up here. But how high will it go until we really start to see some selling again? Maybe like 6,500. Right, so yes, I'm thinking probably in a larger trading range over the next 6 months to a year. But we could have a lot of bullishness before we start to see that selling again. So I would not just like sell and wait for it to go down. If I was going to have a position, I would rather be buying, and then if it does go lower, then I would buy more lower. But I would rather not be selling because we could have a lot more up before we start to see selling again. So thank you guys for watching. I haven't been making too many videos lately. I've been tied up with some family things, and we will begin to start making more videos here soon. So thank you for the patience on the lack of videos. And like I said, we're going to be making some more. And that's all I have for today, and I'll see you on the next video.